Welcome back to Comic Shop Talk. Last week we talked about insurances, so I went out, I said I would try, and Mark was good enough to come by, who is also a content creator, but he also is an insurance agent, and he's come to talk to us about what you need to know about insurance for when you're starting your comic shop up and what you need to look for. Mark, thanks for coming out. Give us the name of your podcast.
Yeah, so on top of being an insurance salesman, I started a theme parks podcast called Diz Life Podcast. It's dizlifepodcast.com, and we talk Disney, Universal, SeaWorld, and it was born of the pandemic, and here we are a few years later.
Yeah, fantastic.
Still doing it.
It's a lot of viewers, and if you're into Disney stuff, you definitely should go check it out. But one of the guys, he's a good customer of ours and a good friend, and one of the nerd culture. He's here with us, right? So what we want to talk about pretty much is what are some of the things we should ask or look for. Like, let's maybe start out with 5 things we really should know about getting insurance for your business.
So the type of insurance you're going to look for is called a business owner's policy, or a BOP for short. A lot of carriers have it. They have preloaded coverages that are usually very similar across companies to BOP, and no matter what piece of paper it's written on, they're fairly standard. But for you in retail, especially in something that has value that can fluctuate and things can go high market value, your biggest thing that you want to look for and look at is to make sure that the carrier that you're with the topic is insurance to value. Some companies will only insure specific items for a set value, while others will give you more bang for your buck, and they may give you the full appraised value of an item. So make sure whatever company you're shopping for, you have a clear understanding of what they're comfortable with covering your items for, because the worst part is to sign up to get a brand new policy and then only discover that, let's say we have $1 million inventory, but that only $30,000 of that inventory or the appraised value of that inventory is going to be covered. Okay. So that's a good conversation to have with the insurance professional, who in some cases might even have to go to the underwriter and say, let me check on that. Because before you sign on a dotted line, just make sure that you're comfortable with how much the company can cover, and make sure that they have the right appetite. The other big thing that you and I talked about before we went on air is make sure that that number falls in your budget, obviously. Right. The cost of insuring $1 million could be astronomical, depending on, again, shop the different companies. Some companies will have better rates for property coverage versus others. And that comes down to comfort. How much of that type of risk is that company on? Companies who have, say, thousands of retail operations might give you a better rate because they have a lot more skin in the game, right, versus a company who's of just a small fraction of their book of business is retail. So make sure you find out what that formula is. What percentage will they insure to value, but also what the rate is, right, per million. Some companies will give you a better rate, and therefore, again, you could get more bang for your buck. But those are the 2 biggest concerns for any shop owner, is making sure that your inventory is protected. Because that is, if something catastrophic happens, that's what you're going to be most concerned with. That's what's going to get you back up and running again if there's a fire or a flood or a covered cause of loss.
Yeah, and this is something that people should update as their inventory changes. Like, I have a lot more inventory than I had when I opened.
Right, right. There's a lot of companies that'll have an endorsement as well called a seasonal increase. And they'll have it built into the policy. It's a small endorsement that during the holiday season, if you're pulling in more inventory, and if there are certain times of year that you know that your inventory is going to temporarily swell, that's a great endorsement, because it'll give you a percentage that will say, here's a percentage up that we will go automatically without having to schedule or like really call each other. That's a really great endorsement to have for retailers as well.
Oh, very cool. So that's inventory and, right, stuff for catastrophic. Let's now talk a little bit about liability, and if there's a difference between having sole proprietor LLC to an S corp or a regular LLC.
Yeah, those are great considerations. A lot of companies will sometimes give you price advantages depending on if you are incorporated, whether you're an S corp or a C corp or you're a limited liability corporation versus a sole proprietor. There's a lot of other advantages. to having those incorporations versus just being a sole proprietor in terms of, and I'm not an accountant. I do speak accountant, but I'm not an accountant. So you would want to consult with your financial professional to see what those additional advantages are. But I can tell you that I have seen with my contractors and retailers, there's a great advantage to being incorporated, quite literally being the limit of that liability that would come back on you in a personal capacity should there be a catastrophe at one of your retail locations. But that BOP that I talked about earlier, most of those BOPs will start with a standard of $1 million combined single limit or per occurrence.
Right.
And then they'll have what's called an aggregate, or, so think of it as, the way I can simplify it is, you would have $1 million per accident and then $2 million per year. So let's say you did have a catastrophic loss of $1 million. Relax, you got another $1 million. You could have one more accident.
One more accident.
Of $1 million before your insurance was exhausted. So that portion of your insurance should not be costly. So if you find during your quoting process that when you're comparing apples to apples with companies and you find that there is one carrier out there that seems to be higher than another, $1 million is $1 million. Right. And unless there are some really extreme conditions or exclusions, most of it is pretty much straightforward. It is slip and fall coverage, it's accidental coverage if someone should fall. Not a ton of product liability in what this, unless someone gets their hand on the wrong kind of comic and it causes some emotional distress. Most of the time, you don't need the product's liability as much as you do just kind of some kind of slip and fall, whether it's immediately upon exit or entrance into your location. But it is an important thing to have. You don't want to shirk that. But most of the time, the cost when you're shopping is going to be in your property.
Right. Now, so a local insurance agent might know better. Is there difference from like town to town, city to city, state to state on?
Absolutely. So I write insurance in the tri-state area, so I'm licensed in New York, New Jersey, and Pennsylvania. And I could tell you, even though we're neighboring and you can throw a baseball literally at any moment and hit one side of the rules and regulations are going to differ from state to state. The paper is different in every single state. The rate is going to be different in every single state. And you do want to be very up on what the insurance rules and regulations are for each independent state, because with insurance, it's regulated at the state level. So even though I have a national producer number, I have to be very aware of whatever the regulations are in that state that I'm writing, and they can change.
Right.
And they can change, especially when it comes to workers' compensation, which I know we're not going to get into today. If you want to have,
I do want to touch on it just a tiny bit. They are not contained in a BOP usually.
So that is going to be a separate policy in and of itself.
That's only if you have paid employees.
So if you have employees that are not 1099, so if you have employees that are, yep. And again, this comes down to some of those advantages that I know that we're going to keep it brief today, that those LLCs have a little bit of an advantage because as a owner, you can exclude yourself on that LLC. Whereas if you were incorporated, you could not. You would technically be an employee of the corporation. So depending on the states and the rules and regulations, some states are a little bit tighter with that than others, and allowing you to exclude even yourself.
Okay.
These are the things to talk to your accountant about. Again, very important things to consider. But the local guy, to circle back, we shop local. There are advantages. People you can shop and you can go online for comparative purposes, but when something goes wrong, it's great to have the guy whose office is right down the street to be here within a moment's notice. If there's a loss or a claim, to advise you, to walk you through, to calm you down. But even if there's any billing questions, it's nice to have that local guy to go to because he will understand even your own inventory.
Right.
If he walks into the store, to be able to look at it and give you the professional advice, hey, I do think you're underinsured, or have you considered this gap that I've noticed? So shopping local has its advantages.
Yeah, so let's talk about a gap. Now, what kind of gap? It doesn't even have to be comics. We can just speak in plain terms as what might be a gap that people don't recognize or think about.
So one of the gaps that people often don't recognize, most business owners' policies have endorsements called hired and non-owned auto coverage. It's bigger in some of the food delivery services where you will be impressing your own personal vehicle into the service of this. So let's say you said to one of your employees, hey, could you take these deposits, run them down to the bank for me and put them in? You are, for the sake of temporarily hiring that vehicle in the service of your business. Now let's say there is a hypothetical accident. The person who gets struck or injured realizes that this was somehow tethered to the business. It could always come back. So for a fairly inexpensive endorsement of $100 or $150 to get hired and non-owned, now that liability of $1 million is going to come in almost like an umbrella over that vehicle, cover that, and the company would say, we have a duty to defend, and we're gonna come to your defense in terms of this automobile accident.
So that would be 100 or 150 a year on the
It's a rough guess. It's a rough estimate.
Right. It's nobody's holding you to it. But this is something I absolutely had no idea of. My vehicle is not owned by the business. It has Haven for Heroes all over it. Has a big sticker on the back.
Yeah.
Everybody knows who owns it. And I guess if I ever was in an accident,
great endorsement, yeah.
I would probably need to have that because they would probably figure that the business, I don't have $1 million on my car insurance. I think it's, in New York State, I think it's $300,000.
Right, and that's where those business insurance policies really work well, is because the limits are much higher in terms of the coverage that you have, and the cost for that higher limit is way cheaper than if you were to raise your personal auto to $1 million. Yep.
So I just learned something very, very important today. And I'm going to be in business 10 years in May, and yeah, that's awesome.
We'll talk.
Yeah. So let's now talk about, again, if you can think of anything else that, like, what about fixtures? Like, if you do have a catastrophic, does it cover not only the inventory, but like the furniture fixtures for
Right,
the
so those things are called business personal property. And it's a great idea to not just have an inventory list, but a list of equipment, cabinets, computers. Because if there's a loss, you want to build that into whatever that coverage is too.
Right.
Because that's going to, again, the startup is not just going to have to be the startup of purchasing inventory a second time, but it's going to have to be that kind of stuff.
So does that fall under the inventory?
That's going to fall under the inventory. Yep, and most companies do just what's called a blanket.
Right.
And they'll say, and the way I like to simplify it for my business owners, I go, okay, we just had a fire. I'm showing up tomorrow with a check. What number do you need to make you either whole or happy? Happy being that you can reopen as soon as we can get inventory and get everything painted and fixed up.
Right.
And that's the number that we work off. If you can support that and provide any kind of evidentiary support, whether it's an inventory list or even just, hey, will this desk cost, and people will write them down or create spreadsheets. I love those kind of things because it makes my job and it makes the adjuster's job very easy when we do have a claim, because then we can just go right off of that list and provide you with the check very fast.
Now, do I have to provide any type of coverage for outside companies that may, so like I have Candy Machine and I have a Coke thing, but I used to have a lot of pinball and video games.
Right.
And so was it their insurance covering it inside my building, or would I have to come up with insurance?
That's it's a great practice if you have something that you feel is a risk. Food is a perfect example. If you have a vendor and you have someone who's an independent distributor of, pretzels or soda, to ask them for what's called a certificate of insurance that you will hold and you'll keep in that in your possession, and you can ask them periodically, hey, could you provide me with an updated certificate of insurance? Because if something happens born of their product, then you know immediately who you need to go to in order to settle that, or what's called subrogate, that if you get sued, your insurance company will then turn around and pull their team in, so that you might be the first line of defense, but you also know that you have another insurance company that's going to back you up, because ultimately it wasn't your fault.
Right. So what about like, so like I did used to have like, you know, video game systems
Right.
and such, and I'm sure that they would have insurance on their games. Would they have insurance in case their games created a fire, or?
So if that should happen, again, this is where sometimes it can get
Gets
really
kinda sticky, right?
It can get a little intricate, and you'll have the various companies who will wrestle with fault, just like they do in an automobile accident. You know, was this faulty wiring? Was it failure of the machine and components of it? All of that stuff gets hashed out. So there's no true like one answer for it or a catch-all. That's when an investigator and someone who gets paid way more money than I do come in, and they'll make the determination. But regardless, I always tell people it's a really great practice to just be insured that the people that you're in business with are insured.
Yeah, so the other thing is that I heard that there was some lines that you could have put in that would have helped during the pandemic, where you could actually foreclosure.
Right.
Which most people didn't have in their
Not many companies had it, and there were one or two companies that did have it in the language, and even they wrestled with the magnitude
of how much they would pay.
of how much they were going to have to pay. And the truth is, so business interruption is something that is written into many BOPs, but there are exclusions in that clause for war, famine, like yada, yada, yada. So the companies don't blanket pay out. You know, the pandemic was the perfect example. There are a lot of companies that cover business income and replacement, and a lot of companies will do the actual loss sustained. So let's say the actual loss sustained is $50,000, then you'll be covered up to $50,000 as long as you can prove, hey, like
This is what I usually do a week.
yeah, here are my
this
books.
many weeks.
Right. And a lot of companies will set like a time limit of up to a year of time, you know, and then beyond a year, like they will cap it. But that's one of those really great questions that you want to check with your insurance professional, see if it's afforded and what those exclusions and conditions are. No one loves reading insurance policies. It's like reading VCR instructions.
I was just showing everybody. Mine is about the size of a walkthrough
Yeah,
manual.
they're about that big.
It's pretty hefty.
But that's the kind of question when you got the local guy to ask your local guy to walk you through.
And he can even he'll walk you, spend the time to actually sit down.
And that makes a lot of difference. Having a good professional.
So is there anything that you kind of want to make sure is in your BOP that sometimes they kind of leave out? Or you kind of something you have to ask for to make sure it's in there?
So you might want to just check on the limits. Because for instance, most of them will have some kind of amount for signage. But if you know that your sign is 15 or 20,000 and they only allow for 5, you probably want to see what's a good way that we can up that. And most of those policies will provide you with an enumerated list of what is covered and up to what amount. So if you know that you have an area that you can see a visible gap in, just talk to your insurance professional and say, hey, this one is a little low given what I have here. What's a way that I can increase that, and what would be the additional cost to do it?
Is there any way to kind of shuffle things around? If you see that something, well, I really don't need this much money for this item, can I lower this and shuffle that money there? Or is it kind of, this is their lowest, this is their standard?
Yeah, most of those are baked in.
Yeah.
So they're not costing you anything additional, they're just baked into the product. So
You can't really shuffle those amounts
it's
around
not about,
to get the stuff you
right,
want.
Right, it's not
It's
about
not true
removing.
a la carte, right?
It's not, no.
Right.
You kind of get this buffet of sorts of, as a business owner, here are all of the options that we afford to you at no additional cost. If you would like more of it, you know, it's like ordering the crab legs at the buffet. You don't have to get the crab legs, but when you do, it's going to cost you a little bit more.
Yeah. So basically, they're trying to manage risk, and they know that giving you this much for this pot over here, this almost never happens. So giving you that amount for that, the risk is super, super low.
Right.
So, but this has a little bit higher risk, and if you want a little bit more money, you're going to have to pony up.
And what it comes down to, again, is knowing your inventory, knowing what level of comfort you can be at with your budget, and also balancing that and counterbalancing that with what it takes to sleep at night, to know that if there was a fire or a flood, especially if you have a residential risk on the second floor, always consider your inventory, because sometimes there are things outside of your control that can affect your business, and you just want to always be very aware of that kind of stuff. and check for covered cause of loss as well. Make sure that
Let's explain what
Sure.
that means exactly.
sometimes people think that because I have insurance, everything could quite literally be covered, when that's not true. Most companies, covered cause of loss: fire, theft, wind, water, something that is a catastrophe. If something breaks down, like I always have people, the cooler, let's use the cooler as a perfect example. Nothing happens to the cooler, it just breaks one day. It up and quits on you. A lot of people will be like, well, I have insurance. I'm gonna call my company and I just lost my $2,000 cooler. I would like you to replace it. And people will get very tense when I say, well, did something run into it? Was it attacked by a goat or an angry child? Like, what was
Yeah.
it that caused it to quit? And they're like, nope, it's just really old. Not a covered cause of loss. I hate to, and
And so that would go for, let's say that you hadn't been maintaining something, let's say the heat, and
it breaks
in
down.
Northeast, it
Yes.
breaks down and a water pipe bursts. And that,
well,
where are we in that kind of situation?
so again, that's where your adjuster would come in, and what they're going to do is they're basically going to create a chain of events. If that chain of events that led to the rupture of the pipe didn't have to do with the fact of you knew that the pipe was old and potentially a hazard, then there is a good likelihood that the company will cover it. Now, was the pipe there's a whole ton of factors. Was the pipe exposed? If it was buried into a wall, they're going to give you a little bit of the benefit of the doubt. But if they go and see that there's water spots that are about 8 months old,
Oh, yeah.
and then you go, my pipe burst, well, you might not be covered in that instance.
Yeah.
I don't want to get into that gray area of, again,
Right.
as the agent, those are normally not. I don't like those commercials that, like, the guy standing 6 feet of water on the television is like, makes a phone call, fictitious phone, and then a guy in khakis shows up and goes, I'm here to solve all your problems. That's not, as the agent, that's not what we do.
Right.
We help you dissect what that document is.
You helped us to lower our risk.
And we analyze, yeah. And we analyze what you've got going on, and we try to match the correct coverages.
Because there's always still risk. Like,
Right.
it's business. You know,
life.
yes. If you want to be an entrepreneur and you want to go out and be your own boss and run your own business, it is risk. But you really need to mitigate as much risk as possible, and that's why we did this two-part episode on insurance. I want to thank Mark so much for coming out, brother. Appreciate it.
Yeah, thank you.
Give us again all your socials so they can check you out on for the Diz Life.
Yeah, so when I'm, again, not doing the wildly fun job of being an insurance agent, I moonlight as a podcaster and content creator over at Chip & Company, and they own Diz Life Podcast, and that's Diz lifepodcast.com, where we're living our best Disney lives
Right.
over there.
Well, and he's been doing a lot on the Lorcana, and I've been talking a lot about Lorcana. You should get in on the ground floor if you got a comic shop. It's a little tough right now. They're trying to work it out over there. I get good information from Mark. Mark, when he can release information, I get it first, which is fantastic. But yeah, it's a good game. It's profitable right now. It's going to get people in your store. Families can play it. That's the greatest thing.
That's the best part
Mark's
about it.
playing with his daughter, and we've got couples, husband and wives playing, boyfriends and girlfriends, and we got a family of 3 or 4 that play. So yeah, it's a really good game, and he has a lot of great information on that podcast about when this comes out.
We just had Ryan Miller, who is one of the co-creators of Lorcana, on Diz Life Podcast this past Monday. So if you tune in to that episode, you can hear the man who created it talk about his 25 years in gaming and like where the Disney connection is from.
Right.
Talks about his favorite cards, his favorite colors, and he gives us a little snippet of what's coming. He can't spoil
he can't
it.
Say, can't spoil too much, but I did hear that there was a little bit of I could see a little bit between the lines of some of the stuff he was giving up, which was cool.
He gave us a character, so we at least know like what property is going to get a little love in the third set. So.
Yeah, so yeah, it's a really cool podcast. You should check it out, and definitely, I think that he gave us a lot of great information about insurance. I've been in business 10 years and I just learned 2 or 3 things I need to talk to him about. So, you know what I say, keep reading comics and open a comic shop.